G'day, this is Jason here from 4XPipSnager 2.0, and today is January 16th, 2018. Before I start here, I'd just like to say please hit the like button. If you like this video, hit that like button below the video, and also subscribe to my channel so the next time I do a video, you'll be first to get it. Okay, so we're looking at the pound yen, 15-minute time frame. Okay, see right up here, 15-minute time frame, as you can see it. And yesterday was Martin Luther King, right in here. Okay, so to me that is a no trade day, just like non-farm payroll, just like the FOMC meeting minutes or any other, you know, impacting news, uh, statement of anything that's going to dramatically affect the price and make it spike up or down like it did right here. Okay? So, anyway, looking at the pound yen, and if we shrink our chart down, you'll see that we came up. So what are we looking to do up here? We're looking to sell. So I did not classify this day as a trading day. It's also Monday. Monday is not a good day to trade. Okay? And that was Martin Luther King Day. So there was no buying in here, even though it went up a fair ways. Okay? After it cleared the trend line, it went up 50 pips. I'm looking to sell. If you want to buy, well, then you make it twice as risky for yourself to buy after it just ran up. Remember, we're always looking to sell at the top of the mountain and then buy at the, in the valley where the rivers run, okay? Where the rivers run through the valley, you want to be a buyer. At the mountain peaks, you want to be a seller. You want to come down, okay? You have people looking up from the valley at the beautiful mountain go, oh, I'd love to be on the top of that. So what do? You buy. That's how you get on the top. Then, when you're at the top of the mountain and you're looking down at the valley below with the rivers flowing through the stream, you go, oh, I've been up here too long now. I'm a little bit scared. I want to go down to the valley now, so I want to sell to go down to the valley. Does that explain it to you in a simple way, ladies and gentlemen? I sure hope it does. It's kind of on like a grade 1 or grade 2 level, but still, it makes it easy to understand where I'm coming from, and how I trade this, and how the big market makers trade this, okay? And even if we're wrong, even if it rallied up 500 pips, okay, and we're looking to sell and we were wrong, it's okay if you were wrong. Because the way that PipSnager is set up, you're not going to lose very much, okay? Even if you're, like I said, like right here, okay? Say this wasn't a holiday and we're selling right here. So we sold right here, let's say. Here's the setup, here's the gap, everything's set up to go. So you sold right here, okay? Your stop is 41 pips. So it went down, 26, 28 pips in your favor, which you could have moved your stop to break even. But let's say that we didn't get that, okay? And then it goes back up here. You don't get out of the trade here, okay? You don't wait for the trade to go up and hit your stop up there. What you would have done is when the market retraced right back down to here, this is where you would have got out. So you would have got out with 3 pips. And other times you might lose just a little bit of money, a little bit of pips, because you're waiting for, the cross of the trend line over the trigger line, or the trigger line over the trend line, I should say. And then you're waiting for it to retrace back to the trigger line to get out of your losing trade, okay? So that's the beauty of PipSnager, is most of the time, 90% of the time, if you're on the wrong side of it, and it was a sell fake or a buy fake, you're going to get out with minimal loss, because it doesn't take that long for the trigger line to cross over the trend line, which is telling you you're on the wrong side. You're in the wrong trade. Okay? Okay, I'm glad I explained that. So anyway, our trade was right here. Okay, ladies and gentlemen? If we drew a line across like this, this big candle right here, okay, right here, this big, beautiful red engulfing candle that went right through this support right here, okay, that was our signal to say, hey, in the next 15, half an hour, 45 minutes, maybe an hour from now, we're going to look to sell it. So you would have looked to sell it about 15 to 30 minutes later right here. Your stop was up here, 38 pips, and it went down 66 pips potential. Okay, so you would have definitely got your 1-to-1 win-loss ratio. Okay, so let's move on now to the next pair. This is the pound dollar. I believe the same thing where the pound, see, the pound came all the way from down here, went up 360 pips. So are we looking to buy up here? No, we're looking to sell. Remember, we're on top of the mountains now up here, okay? And we want to see price go down to the valleys again. So we'd look to sell. So where was our sell? Right in here. But it wasn't right in there because, you know why? I'll show you why. That's why. Because it bounced off there, there, and there. This was not our setup. Okay? It was right in here where it broke through. Came back up. You would have sold right here. Okay? And down it went 42 pips. And our stop would have been, you know, up here maybe 33, even to the top. Yeah, 36 pips, 42 pips. You would have got your 1-to-1 win-loss ratio. Let's look at the yen now. The yen, I believe, came down. Yeah, see? Came down, 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 down. So what are we looking to do? This day was a holiday, remember? This is Martin Luther King Day. So what were we looking to do today? We were looking to buy it. We're buying from the valley below. So you would have bought right here, because this candle right here told you, that, hello, we're breaking through the resistance right here, and we're going up. And that's what we wanted. So you would have got in right on the opening. Hold on a sec. Wow. Excuse me. Okay, I had to clear my throat there. Sorry about that, ladies and gentlemen. So, okay, this candle told us, hello, we went through the resistance. We broke and closed above this resistance right here, okay? So on the opening of this next candle, you would have went long. Our stop would have been right here, 29 pips. And look, it went up 35 pips. You would have got your 1-to-1 win-loss ratio on this trade today, which was a buy. You see how we put the probabilities in our favor when we're looking to do the right thing? We're looking to buy after it's gone way, way down, and we're looking to sell after it's gone way, way up. Okay? That's how you put the probabilities in your favor and stop the central bank's games of how they run it up one day, then run it down the next day. Okay? And they do it just to keep you guessing. Okay? But thank God you few lucky people here have me explaining it to you why and how they do this every day, because they know how emotional traders trade, and they know how to get you. And I'm telling you how to avoid, well, not avoid it at all times, but a lot of the times I'm telling you how to avoid it. So let's make this chart small, and as you can see, from that other day, it went up, and then it went up again. Sunday open right here, it went up again. So what are we looking to do, ladies and gentlemen, after it went all the way up here? Are we looking to buy up here today? No. We're looking to sell. So where is our sell? And it's right here, and I'll show you where it is, right here. Okay? So this candle right here, even though it has a wick on it, doesn't matter. It still broke through these 3 points of support right here. Point number 1, point number 2, and point number 3. This candle right here told you, once it retraces back to the trigger line, you would sell right there. Your stop is 41 pips. Did it go down 41 pips? Yes, it did. So you see there is 3 trades right there, okay, or maybe 4 trades. Let's see, there was one there, there's one in the yen, there's one in the pound. That all worked out, and the pound. Yeah, there's 4 trades in a row, 4 pairs I showed you. 1, the pound yen. 2, the pound dollar. 3, the US dollar yen, which was a buy, and gold. Okay? All 4 trades worked out because I showed you, I went and looked at the past and looked at where price went in the last few days, and it either went up or it went down. If it went up, I told you to sell. If it went down, I told you to buy. And that's how you got to look at this. So anyway, I hope you enjoy watching the video today. I did give you some very good, helpful, knowledge here of trading and insights, and I hope you enjoyed watching today's video. If you did, please hit the like button below. Please subscribe to my channel. You'll be the first to know when the next video comes out. And also, if you have not picked up your copy of 4XPipSnager 2.0, I urge you to click the link below this video. You won't regret it. It's a very simple system. But the main point is it works, okay? And for a lot of people, I know, I get it, where you say, oh, this system, it can't work. It's too simple. Well, believe it or not, simple works. It's when you overcomplicate things, that's where you get into trouble. If you're looking at all these different things, like you're looking at 3 different indicators, or you're looking at, harmonic butterfly patterns, or you're looking at Fibonacci, or, it's okay to look at all these things, but you really only need one thing. It's simple. You follow it day after day, and you'll make pips day after day, and that's it. But if you try and keep on learning all this new stuff, it just can get you into trouble in the end. But anyway, once again, this is Jason Sweezy for 4XPipSnager 2.0. Thanks for listening, and we'll see you in the next video.